Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that addresses all your stock-related queries. In case you're here for the first time, well, a WhatsApp number is flashing on your screen, so you can send in all your queries on this number. Don't forget to mention your name, your contact details and your location as well. We can also give you an opportunity to speak directly to the top market guests who come on the show to guide you through your stock portfolio and stock queries as well. Alternatively, you can also use the YouTube channel where you're watching our show live on. Use the comment section to send in all the questions and I can pick up some questions from there as well to address it to our top market experts on the show right here. Let's now welcome our guest on board. We have Mr. G. Chokalingam, founder and MD of Economics Research, joining in on this show. He has a wide and a long experience in the markets. He's been tracking the markets for over 2.5, 3 decades now, and we want to see how he can continue to guide in all our viewers and investors like he always does week on week. Warm welcome to you, sir. Thank you so much for taking the time out. Season's greetings to you for the upcoming new year as well. First up, before we start taking all the queries of our viewers, could you guide us through any key lessons that you believe you have picked up for investors from 2024, the way the markets have turned out, and of course at 2025's brink, what is it that you would want investors to keep in their mind when they put in their money in markets?
Thank you for your greetings. I wish you a happy new year. I wish the entire team at Business Today a great success year ahead.
Thank you so much, sir.
2024 is quite unique year, very rare to see in the last 3.5 decades. For various reasons. One, all of us know the kind of record level of market cap or equity wealth it created for the investors. And second, the number of themes participated. Earlier in the small and mid cap theme, just 1 or 2 themes would participate in the boom. So this time you name anything which has participated. And third, never in the history the boom in the small and mid cap continued for beyond 4 years. Even continuing 4th year was quite rare. I remember only once it happened. It always used to fizzle out in 2 to 3 years without fail consistently. But this is the first time the boom extended for the almost 5th year in a row, starting from 2020 March. Now these are all unique, but what has happened with that's a case with many boom and bust. In this boom also, some people would have made money, a lot of people would be losing a lot of money because another unique thing was that the number of new age companies, number of the new businesses, digital and the new businesses like greenery. So many companies have come. And people are happy to buy the stocks at 50p, 100p. Even now, a lot of stocks are trading at 80 to 100p. That is where a lot of people have already lost a lot of money. I mean, there are many stocks, hundreds of stocks which have come down by 30 to 70%. So this is also quite unique in terms of the extent of losses. So what investors should learn is that, yes, of course, you may try to chase the momentum in the stocks, but don't compromise the fundamentals, the values. Don't compromise completely. Don't ignore them completely. So look at management quality, balance sheet quality, valuation, comfort zone, the leveraging. These are the 4 key things please look at, and also the business model, the durability of the business model. And give at least 20, 30, 40% weightage to these. And then maybe 50, 60% to momentum if you are risk taking. So this is the one great lesson from the unique stories which played out in 24. One should learn. That's my humble suggestion.
That's wonderful to hear from you, sir. We'll start taking some of the questions, and in between we can also discuss about, your own preference for key sectors and the stocks that you're looking at for the new year. But we have a lot of our viewers' queries coming in, so we'll start off with that. On our YouTube alone, we have a lot of viewers already sending in the questions. So we'll start off with Avdish Thakur's question. His question is on Apollo Microsystems, and he wants to know whether a fresh entry could be done in this stock for the next 2 to 5 years perspective as well. Apollo Microsystems, if you look at the kind of move that we have seen on the entire defense space, it's been again a tale of 2 halves. But Apollo Microsystems currently at 96.6, does it look attractive to you, sir?
It's certainly not attractive even at current price after falling 30-40%. Yes. Value somebody is not there. If somebody is risk taking, he can play on momentum in the short term. but it is certainly not suitable for conservative investors because the valuation comfort is not there.
Okay, so the valuation comfort is not there. So right now it wouldn't be advisable to get into the stock is what Avdish, our guest, has answered. Next, we have a question coming in from Vinod Chaudhary. He says, hi Sakshi, good afternoon. Thank you so much for doing this for us retail investors. Thank you for your appreciative words, Vinod. He says, I want to know on Shyam Metallics, is the stock looking interesting, and could you please ask if I can do multiple entry levels for the long term in Shyam Metallics if I have a long term view on this stock? How would you really assess the stock right now? Do you think if someone has a long term view, can multiple entry points be suggested here to continue to accumulate this one?
It's no doubt it's a good company. I looked at the business model fundamentals.
Sure.
It a big size also, but the problem is now, right now, the metal, particularly the steel industry, is going through a lot of difficulties. So we all know how the exports have come down drastically and how the imports have gone up, and then the steel prices also moderated significantly. And right now, I don't think even the industry is very confident of improving the prospects in the short term. So I believe, considering the industry outlook and valuation fundamental, this is not the time to go and buy Shyam Metallic. If somebody is holding, yes, one can hold it for long term, but the outlook for industry and also the valuation do not enable me to give you a buy call based on my research on Shyam Metallics.
Okay. Next, we have a question coming in from Satya. He says, hi Sakshi, good afternoon. Could you please ask if any fresh investments can be done on Axelia Solutions? I can enter in two different levels and spread my investments in two tranches. What would you really suggest on Axelia Solutions? Okay, let's pull up the stock right there. To see how the stock is currently trading at. 1498 is the current price for this one. The stock in the last 6 months has dropped by about 11%. On a year to date levels, it still stands at just about 5 odd percent. So it's been a sideways year for Axelia Solutions. And when we look at the last 5 years odd, the stock has still managed to gain about 40% odd. Mr. Chokalingam, how are you looking at the fundamentals of this company? Do you think it is advisable to look at this from a long-term perspective?
In fact, we have a buy recommendation on the stock, and it has not been clicking for us, but it's a great
Okay.
company. It is owned by the world's largest asset management company or private equity fund.
Okay.
And it has changed the hands 3 times in the last 2 decades. And every time when the promoters changed, it created more wealth for the shareholders. And the stock also very attractive. The business model also very robust because it caters to aviation industry, which is now growing in a big way across the world. So we maintain the buy recommendation on Axelia at the current price. It's a very attractive buy.
Okay, got that. I hope this has answered your question, Satya, even though you entered at 1733, you are now saying, and the overall view you have actually got from Mr. Chokalingam. Okay, then Mr. Ravi Reddy also sends in his question, and this question is on Bajaj Finance. He wants to know, can I buy the stock at the current level? Yes, we have seen a certain downtick on this one also in 2024. But do you think the time is ripe to look at Bajaj Finance at 6954? Does it look promising for the new year, sir?
It's a great company, great management, great achievements, and great track record, no doubt. But I am not comfortable in buying Bajaj Finance at current valuation at the current juncture because the entire financial sector, including banks and NBFCs, are expected to go through the moderation, significant moderation in credit growth. So therefore, I would not give this kind of valuation multiple at current juncture. One can consider a stock like HDFC Bank. On all front, HDFC Bank is improving in terms of CDR ratio, liquidity ratio. Even they are making a lot of attempts to improve the credit growth. And most important trigger would be listing of the financial subsidiary that could give significant resources to the bank to improve its capital adequacy and improve the business. And valuation multiple is far below Bajaj Finance. So I prefer HDFC Bank to Bajaj Finance at this juncture in the banking and financial space.
Okay, got that. So from the banking and the financial space, I hope you've got the suggestions that Mr. Chokalingam has guided you through. Before taking the next question, I would want to just extend this conversation with you, Mr. Chokalingam. For the year 2025, what is your own expectation from the banking and the financial services industry? How are you guiding through your clients right here? Do you think this debate of private versus PSU banks will sustain? Is it best to probably stay with the leaders of all the three segments of PSU, private and financial services, and keep the ball rolling? What exactly should be the ideal strategy here?
Yeah. And banking and financial is not going to see a robust growth in 25. As I
Okay.
mentioned, the credit growth, which was around 16%, now we expected to moderate to even 13-14%. And therefore, and also RBI is likely to bring in more measures, to
Yes.
control the unsecured credit growth. And therefore, it may not, but still, the banking space will be one of the few sectors to post a double-digit, revenue and profit growth in the next year. It is very difficult to see a broad sectors in Sensex or Nifty, which is promising you double-digit business growth, whether you take IT or cement or FMCG. So many sectors are suffering from single-digit growth syndrome, what I call single-digit growth syndrome, like IT sector in dollar term revenue, FMCG in volume term, cement in volume term, they all suffer from single-digit growth syndrome. So in this background, the banking sector would continue to grow the credit at around 12 to 14% at the industry level. Individually, some of the banks will outperform that. So you can definitely hope to make money in banking sector. And within that sector, I would prefer the large banks like HDFC Bank, and also some of the quality PSU banks like Bank of Maharashtra. The stock has corrected nearly 30%, and it is one of perhaps the best bank in terms of asset quality. My net NPA is just 0.2%. So some of these banks will do well, but I would continue to maintain very pessimism on the microfinance and small finance banks and all those segments, because it is going to be very tough for them to come out of this asset quality issue and also maintain a solid growth. So therefore, one can bank on large banks and selected old private sector banks like Karnataka Bank, and public sector banks like Bank of Maharashtra. These are my top recommendation. I would reiterate Karnataka Bank. Before that, I would disclose that we have personally invested in Karnataka Bank.
Okay.
I may be wrong, but I have extraordinary confidence in Karnataka Bank to play out in 25 or 26 in a big way, because this is the only bank trading at a 28% discount to adjusted book value. Whereas now the institutional investors come into the bank, including corporate, the shareholding pattern has changed a lot as compared to what it was 3-5 years back. Today, this is also largely institutional owned bank. Around 42% stakes are held by institution and corporate bodies. And even if you include HNI's category, dominant shares are held by these people. And the bank is also consistently doing well. The most important point I want to stress for old private sector bank like Karnataka Bank, in the last 3-4 months or 6 months, there is a realization from the large banks that this is a time to focus on the branch network. They realized that if you want to build CASA deposit, low cost deposit, if you want to grow deposits consistently, you need to have a branches. And if you go 100% digital and tomorrow there is any IT glitches, your whole banking operation will come to a standstill. So even a couple of days back, Yes Bank CEO has mentioned this in a media interview. It's very important to have branches, and this is a bank which is 100-year old, built enormous network of branches. So if you value the financial assets, if you value the branches, I think the current stock price is extraordinarily low. So I may be wrong. Investors should consider the fact that we have invested, but this is my honest statement about Karnataka Bank fundamentals.
Okay. Okay, got that. So there you have it from the banking space, the key stocks that Mr. Chokalingam is looking at. And of course, Karnataka Bank, we will be revisiting probably the same time next year when we will be speaking to Mr. Chokalingam to see how things have turned better for the stock. We'll start taking some of the other questions that are pouring in for you, sir. Mr. Ikambaram Chandrasekharan is writing into us. He wants to know on SKF India from you. SKF India, he wants to know, is it the right time to buy the stock at the current levels? Let us pull up the stock right there to see what the current levels are. 4,558, 2.5% higher today. Again, in the last 6 months, we have seen a 30% drop on the stock, but on a year-to-date levels, again, it is a flattish one that we have seen. But if we look at the last 5 years odd or so from 2019 onwards, the stock has actually given a 113% return to investors. Your own sense, Mr. Choklingam, on SKF India?
Yeah, it looks good for long term. Short term, it may not give much return because
Sure.
user industries are in difficulty, but certainly it's a good, attractive stock for the long term.
Attractive stock for the long term, got that. Let's take the next question then. This is from Ankur. He says, hi Sakshi, good afternoon. It is raining here in Jaipur today, and he's from Jaipur. Ankur, likewise in Delhi also, it's been a rainy morning since morning, and therefore we are expecting the temperatures to drop further, and Delhi winters to further turn deeper in here. He has a question on Tata Motors, Mr. Choklingam. He has 200 shares at the rate of 412. Okay, so you actually got a very early entry right there. So congratulations to you, Ankur, on that one. Now he wants to know where can he average the stock. Of course, the stock has been lying low for about last 2 months odd or so. It's been in a very narrow band of range. How are you looking at Tata Motors right now at 755? Do you think this is a good level to average out?
One can hold it, but I would not suggest adding it because as
Okay.
we know, the SUV segment, which was growing in 30-40%, suddenly started cracking in terms of the growth rate.
Okay.
The industry growth rate has come down to single digit, and Tata Motor, all of us know that it has a dominant presence in SUV. And, therefore, it's a hold for already holding the stock. And people can look at some of the tire stocks, if you want to play an automobile, because the tire industry depends on replacement market for the extent of two-thirds of their total sales. And then you also have seeing a lot of entrants in the EV segment. So the whole tire industry is going to see the robust outlook. Apart from that, the natural rubber prices have corrected a lot from the peak, and the oil price also down 18-19% from 50-week high. So therefore, we have a buy recommendation on MRF. I do not have personally, but we have a strong outlook for MRF and JK Tire.
Okay, got that. MRF and JK Tire is something that you could also look at within the auto ancillary pack. Next, let's take another question. This is from Vinod. He says, ma'am, I have KFin Technologies in my portfolio with a 330% profit. Congratulations to you, Vinod, for picking the right stock at the right time, holding on to it patiently to be seeing such brilliant rewards in your portfolio. Now he wants to know, is it the right time to book profit or shall I continue to hold for next 2-3 years? I have it from the IPO time. 100 shares at the rate of 366 is what I got. And look at the kind of stock that we have, price that we have now. It's 1544. So some of the IPO stocks which are actually held for the long term do definitely reap in higher profits. Mr. Choklingam, to you, how would you really look at the stock?
It's all new age business companies. Definitely valuation company is not there, but if he can take a little risk, he can continue to hold. But if he's very conservative, I think this is the right time to book profits.
Okay, so in case you're very conservative, profits which are back into the banks are best celebrated, and in case you can actually take more risk, there could be some volatility, but going forward you could actually hold on is what Mr. Choklingam is suggesting to you. Okay, next let's take another question, and this one is coming in from Samvit Nageshwar. He says, I need a long-term view on IDFC First Bank. What would you suggest on this one? IDFC First Bank, we've been discussing the entire banking space with you. This one is also one of those which has been a rather underperformer this year. Do you see things improving for the better for this one?
I may be wrong, but I've been, so little pessimistic on the stock for long because it's a great management, no doubt about it. But the equity size and the competitive paradigm now, which a bank like this is facing, I don't think this is going to outperform within the banking space even in 2025. So as I mentioned, I would prefer bank like HDFC Bank
Yeah.
or Bank of Maharashtra, particularly, which I believe can outperform IDFC First Bank.
Okay, IDFC First Bank. There you have it, a view that's coming in. Next, Namita Arora writes in and he says, "Hi Sakshi, how are you doing?" We're doing very well, Namita. Thank you so much for asking. I hope the same for you too. Her question is on some of the recently listed stocks. One is Western Carriers and the other one is Cross Limited. Now let's look at Western Carriers first. This stock is actually shot up today about 7.5% odd, and the company also received an order worth 8 crore rupees as of yesterday, and that's what, and this is from Tata International, that the company got an order that pulled up the stock yesterday and today as well. And the stock has been actually inching up over the last few trading sessions. Let's look at this one, and the other one is Cross Limited. Okay, let's look at the last 6 months odd. So there's been again a sideways move. There was actually a dip along with the market correction. In the last 1 month, it's actually tried to pull up a little bit. Either of these stocks or both, sir, do you track? Have you studied anything that you'd like to guide here?
Unfortunately, I have not studied both of them being new companies. I need time, so maybe in the next show I can cover them.
Okay, Namita. So maybe you could ask this in the next show. By that time, Mr. Chokalingam would have read through both these stocks to give you an appropriate advice on these two stocks. Next, we have Ankur writing in. He says, please give your views on Jyoti Structures for next 2 to 3 year horizon and Imagica World also. These are the two stocks that he wants you to share your views on, Jyoti Structures and Imagica World.
Yeah, I have studied. My research views are negative on both. I studied fundamentals and balance sheet. I have a sell call on both.
Okay, sell on both right now for Jyoti Structures and Imagica World. Not convincing stories for both of these at this point in time. Okay, let's now take another question. This is from Mr. Nageshwar. He wants to know on Senco Gold. We do know how the gems and the jewelry stocks really performed well during the time when gold prices were surging to all-time high levels in the recent past, sir. And Senco Gold also, after getting listed, did have a good time during the same phase too. Your own sense now, looking at the kind of expectations that we would have on gold, probably it could continue to stay elevated because of the geopolitical concerns and the macroeconomic conditions worldwide that are developing. Do you think some companies which deal in these gold jewelries should be continued to be looked at positively?
Oh, definitely Senco trades at a very enriched valuation. And
Okay.
secondly, I have been very bullish on gold for last 2 years, but now I am not that bullish. I believe ultimately the interest rate reversal will happen in USA after 6 months. So first 6 months, particularly the gold might underperform. Thirdly, I normally do not recommend the jewelry stock because I personally find it difficult to understand the quality of the balance sheet, like the valuation of inventory of jewelry, all that. So therefore, normally I avoid giving buy recommendation of jewelry stocks.
Okay, got that. We'll take some more questions from our viewers for you, sir. But in the meanwhile, I also wanted to just get a sense from you as we've been inching closer to the year end and we're looking at 2025. A lot of investors are now trying to make newer strategies for the new year. And probably they are looking at cumulative, lump sum money deployment as well as SIPs. Where exactly should they be starting off with? Do tell us, how are you assessing the situation right now? How would you advise somebody who's looking at a fresh this new year? You did talk about how we are in a 5th year running in the positive returns for the markets. What beyond this will be important for us to consider while we make a fresh investments?
Yeah. So for several months, I was nervous on the small and mid cap, as the record level of market cap was, hit at around 484 lakh crore. But last 2 months, correction has given me a lot of conviction that it is a time to go back to small and mid cap. So over 40 lakh crore of market cap was wiped out, and I believe roughly two-thirds of them all from small and mid cap. So all lot of perception-driven small and mid cap stocks have fallen a lot more. Even some of them have fallen 60, 70%. within 3-4 months or 6 months. And in the process, even the qualities small and mid cap stocks are corrected because of the liquidity crunch. Now, therefore, I will change my view. In 2025, starting from December, I believe the small and mid cap would outperform the large cap, at least for the 6 months of the 2025 calendar year. One is the correction and valuation, and second, I am not very confident that FIS would come back very soon in January. They may wait, first of all, they may wait for a budget presentation before taking a call on India. So there is a chance that early 2025, the large cap might continue to suffer, and that would favor small cap, mid cap. Second reason, it is very surprising that even last week, over 10 lakh new investors have registered in the Indian capital market despite the meltdown in the market. So throughout 24, we saw 7 to 8 lakh new investors coming in every week. So that trend is continuing, and that could continue in 25 as well, which means, in my understanding, majority of these new investors, retail investors, they focus on small and mid cap. So that would be the second reason for the small and mid cap to outperform in the first half of 2025. The third reason, as I mentioned earlier, several sectors, roughly there are 8 to 12, 10 sectors constitute Sensex and Nifty dominantly, and many of them have this single digit growth syndrome, as I highlighted earlier. So, whereas there are over 4,000 stocks in the small cap and mid cap space in the Indian market. And there are several unique stories in terms of the growth opportunities, value unlocking from land bank, investment holding, merger and acquisition. So you can easily find out of 4,000, at least 40 stocks which hold these growth stories are unique, value unlocking stories. So that would attract the retail investors. So considering all this, I firmly believe small cap and mid cap would be the best segment to try to create wealth in 25. However, do not ignore 4 or 5 parameters. One, management quality, and two, the balance sheet quality in terms of the net cash, net debt, receivable inventory as a percentage of sales. Third, the valuation comfort zone, and fourth is the durability of the business model or possibility of value unlocking. So these are the 4 or 5 things. Don't ignore. Even if you ignore, don't ignore them completely. If P ratio is 100, ensure that the profit grows, if not by 100%, at least by 50%. I know. So to that action, compromise on the value investing, because value investing often fails also to make a quick wealth. But don't ignore completely. So make a compromised, balanced approach between momentum-driven new age companies and the certain fundamental teachings we have made. And then you are very safe, and don't have a single stock heavy concentration. If you are risk taking 8 to 12, if you are conservative, 20 stocks. So this is our research strategy, which we keep suggesting to our own clients frequently.
Okay, wonderful. We'll take some more questions for you that are coming in, sir. The next question is on Prudent Corp, and this is from Rudransh Bharadwaj. He says, could you please guide me on this stock Prudent Corp? Should I plan an entry now, and what are the future targets for it? Okay, let us look at Prudent Corporate Advisory Services is what he's asking. 2,847 is the current level. In the last 6 months odd, the stock has had a good run up, 48% odd or so. The stock in the year to date basis has doubled investors' money. 137% of a rally is what we have seen on Prudent Corporate Advisory Services Limited. That's the kind of rally that we have already seen. Now, when we look at the stocks that have actually outperformed by a wide margin to the Nifty and even to the sectors that they are from, how should one approach such a stock, Prudent Corporate Advisory Services, sir, for you?
Yes, I looked at their business model, distribution service, all that. They are doing very well. So one can hold. For buying, I would, considering the current market weakness, maybe another 5-10% if it falls, then, fundamentally it becomes a very sound buy.
Okay, got that. So prudent to hold Prudent Corporate Advisory Services. That's the view that's coming in from Mr. Chokalingam. Next, we have a question from Momita from Kolkata. She says, good afternoon, Sakshi. I want to know if it is a good time to add Angel One for the next 1 to 2 years. Now, this one has been another outperformer in the wealth creating space in the capital markets related stocks. We've seen how the brokerage houses have actually shot up in trade recently. It started off with BSE, CDSL. It went on to the other brokerage houses as well, like maybe a Georgette, Angel One, Edelweiss, or even 361 WAM. Angel One particularly, do you think it will have still a steam for someone looking to invest in it for next 1 to 2 years, sir?
I don't think so. Being in this similar business, equity business, I think there is going to be a lot of pain in terms of brokerage commission, especially in the digital space.
Okay.
Uh, so I would give a sell call on Angel One at current price.
Okay, at the current levels, not a good idea to invest in it. Mr. Chokalingam is having, bearish thoughts as far as 2025 is concerned. There could be some more pain, and therefore it's a sell from his side on Angel One at this point in time. Okay, let's take another one. This one is from Venkat Jala, and he says, good afternoon, I am from Hyderabad. Good afternoon, Mr. Jala, how are you? Hope you're doing well. And his question is on Hindalco. He has 400 shares of the stock at a price of 110. Now he wants to know, is it wise to sell 200 shares right now and instead put whatever I get in Bajaj Housing Finance for a long term creation point of view. So he wants to partially book out of his investment in Hindalco, sir. And he's been invested in it at a price of 110. So he's actually sitting on good amount of profit there. So partial profit booking here and investing that money in Bajaj Housing Finance. How would you really look at it?
So I can give, because I hold only research analyst license, so I can give only research view. To build his individual portfolio, he has to take a call. I can say that Hindalco fundamentally very sound. Stock price has already corrected a lot. Whereas Bajaj Housing Finance, yes, it's a momentum-driven stock, but valuation is extremely stretched. So therefore, he can take his own call whether to go after momentum-driven or safe investment of Hindalco, because the metal price also, though the markets have corrected, the metal prices still remain quite firm across the world. So therefore, I would suggest a buy call on Hindalco.
Okay, got that. So I hope this has answered your question, Venkat. Next, we have a question, and this one is coming in from Pratik Khare from Gwalior in MP, and he wants to know just a very short-term view on PNB Bank. For a 1 month perspective, he's looking at it. Even though, sir, you do not look at the short-term horizons, what is your entire expectation on PNB particularly?
Medium to long term outlook looks good, but 1 month view, one should not bank on the research. It all depends upon the market conditions. So,
Okay.
yeah.
So medium to long term, it can still be positive, but do not look at the bank from a 1 month perspective. That's the view that's coming in on PNB for you, Pratik. I hope this has answered your question well. Next, we'll take another question for you, sir, and this one is from one of our viewers, Vijay Reddy. Again, he's from Hyderabad, and he says, good afternoon. I want to know if I can add Titagar Railways. My buying price was 111. I have about 4 shares. No, my quantity is about 55 shares, and I have this price is at 1,114. That's his entry level for Titagar Railways, 1,114. Now he wants to know, I have a long term horizon on this one, so what should be my strategy on this one? Railway space again was seeing some bounce return to it, because probably some investors wanted to do this pre-positioning ahead of the upcoming union budget. Mr. Chokalingam, could you guide us through your views on the entire railway story? I think he's taken a recent entry. Right now the stock price is at 1148 and he got it at 1114 odd levels. What would your view be on Titagar Rail right now?
Unfortunately, in the last 20 years, the railway stocks, they always play out in a thematic fashion before budget and then they correct. And the story has already played out. Even at current price, it is trading at over 40 PE. Yes, it has got a very credible track record. Oh, it's a hold at current price, but I would give a accumulate rating only if stock falls at least another 5 to 10%.
Okay. He also says appreciative words for you, sir. He says, I want to thank Mr. Chokilingam for making a few multi-baggers for me. I followed his suggestion on BSE, on Bank of Maharashtra, Taj GVK, to name a few. Orchid Hotels also was among those. And there are many others which I've invested on his advice, and I've made multi-bagger returns. So congratulations to you, Mr. Chokilingam, and to our viewer as well for following your advice, and your guidance has really helped him make good returns in the markets. And with that, I also would want to ask for 2025 if you could suggest any key stocks that could continue to make multi-bagger returns for investors, for those who are following you now, watching and listening to you right now, and who may want to follow your advice going forward also, sir.
I would give two stocks. One is KCP Limited.
Okay.
I may be totally wrong, but I don't have owned the stock directly or indirectly. But I believe it's a potential multi-bagger. Promoter stake is less than 50%. A lot of HNIs have entered the stock, and it has got a fantastic assets, extraordinary quality balance sheet. It is a net cash company despite operating in commodity business of sugar and cement, and 43 lakh ton of cement, and it's the only Indian company operating outside India in sugar space and making hundreds of crores of profits. And it has got an engineering plant in Chennai, which has got a huge land bank. It has got a star hotel in Hyderabad, which has turned around, and it has got a giant venture also with a foreign company. So it looks to me is possibly a multi-bagger in next 1 to 3 years, and fundamentally also it is very attractive. Second stock, Nesco. I mean, I have been repeating it because this story has not played out in the last 5 years. I should admit it. So far, I have failed in in this call. Even in 2019, the stock was trading at around 800. So the way other real estate companies have gone up, this has not performed well. But I have not given up hope. Some of the viewers also know my stock sometimes took 3 to 5 years, like a BSE. I was frustrated even after 5 years, but then it went up 5 6 fold, and then again I am frustrated because it went up beyond my imagination. So I learned one thing in the last 35 years is that solid multi-factors sometimes test your passions 5 to 6 years also. So don't worry. As long as the stock selection is proper, one should have a conviction. So that is why I keep repeating Nesco. I still maintain my view that this is a next generation stock, because if you look at the management own presentation, the development potential is a little more than 80% of the existing projects. So, and a cash rich company, it's around 1600 crore cash. Recently, this company has got a order in Andhra also, up to Vijayawada, the facility management order for about 500 crore business. So a lot of land potential in Mumbai. We all know how the land is scarce in Mumbai, a city which is V-shaped, and and their IT park is doing well, and their exhibition business is doing well, and also they diversified into food businesses, many other verticals, event management. And recently they altered a memorandum of association to include many other segments related to the land bank, like hospitality, luxury apartments, so many. So I believe possibly 2025 the story should play out, if not in 2026. But investors should know that me, my family, my company, all of us have invested in this.
Okay, well, on that note, thank you so much, Mr. Chokalingam, for guiding all our viewers on their queries, as well as sharing these potential multi-bagger ideas. We will certainly take note of it, and hopefully these stocks will definitely turn around story and portfolios for a lot of our viewers and investors, as many of them have been your keen followers too. Many thanks for being with us, and yet again, season's greetings to you for the upcoming new year, sir.
Thank you very much.
All right, and now viewers, we have another guest joining in. We have Mr. Kranti Batini from Wealth Mill Securities, another favorite on the show right there, who's been followed by a lot of our viewers for his own ideas too. Warm welcome to you, sir, and thank you so much for joining in. We wish you a very happy upcoming new year, 2025. May it turn out to be a great one for you personally and professionally as well. And may you continue to inspire all our viewers with great multi-bagger ideas like you always do, and they continue to reap in great benefits in the stock markets. We have a lot of our queries that are coming in, so I'm going to be throwing the first question to you, Mr. Batinin. This is from Chirag. He says, I want to know on Ashoka Buildcon, what are its long-term prospects? He wants to know on Ashoka Buildcon. Do you track the stock, sir?
Yeah, Sakshi, with respect to Ashoka Buildcon is concerned, recently the stock has been rallying in anticipation of what we are witnessing uh, in the infrastructure story and also the construction story is concerned. So the infrastructure theme is intact. Of course, in the first half of the year, it was a little bit subdued. If the investor is a long-term horizon investor, at least if you have more than 1 year kind of investment horizon, you can definitely hold on to Ashoka Buildcon. For a still from this range also, he can get 15 to 20% gains.
Okay, got that. Next, we have a question from Mohit in Ludhiana. He says, I have got 350 shares of Fortis Healthcare at the rate of 270. My time horizon is 2 years. Should I continue to hold on? Please guide me. On Fortis Healthcare, what's your suggestion, Mr. Batine?
With respect to the healthcare businesses in India is concerned, actually, we're quite optimistic and bullish on the healthcare business. It can be the chain of hospitals, group of hospitals can be. One can hold on to the stocks. Our favorites in this space are concerned. Aster DM, Healthcare, Rainbow. These are the different kind of specialized chains in the hospital groups. Of course, Fortis also, it have its strong brand in India. So you can hold on to Fortis Healthcare. Still, from this range also, the stock can deliver 20 to 25% returns from this range.
Okay, got that. Next, we have a question from Mr. Chandra Singh. He's from New Delhi. He wants to know what is the fresh entry level that is advised on Share India Securities. Now, the stock is trading at 311 right now. In the last 1 month, the stock has moved up 7% odd, but sideways in the last 6 months, and year to date, it has slipped by about 14 or 15 odd percent as well. It's been kind of an underperformer, but any suggestion on this one? Should it be looked at for a fresh entry?
If the investor is seriously studied this company and interested to go with this company, he can add in this range. 300 level looks support range for this stock for a medium to short term. He can try to add this stock at 300 range.
Okay, got that. Next, we have a question coming in from Mr. Tekpal Bhatia. He says, I need a view on Kernex Microsystems. Is it a good stock to invest in? Kernex Micro, what's your suggestion on this one, Mr. Patini?
The stock have witnessed a strong rally, Sakshi. In fact, past 3 years performance is concerned. The stock has been one of the multiplier effect. It started from 200 range, currently trading at 1300. Given the signaling business they are into and also the greater focus towards the railway infrastructure business is concerned, the stock is positioned to benefit from this growth in the railway infrastructure space is concerned. So one can he can add, it's a investable stock. He can add at dips, but the crucial thing for these kind of stocks here, entry levels are crucial. Just for a month back, the stock was hovering around 800 levels. Okay, that was the good range to enter. Okay, whenever these stocks gives consolidation, that is the time to enter into this stock. Well, most probably you can start buying this stock in a very staggered manner.
Okay, got that. Next, we have a question. This is from Namita. I had posted it to Mr. Chokalingam, who had come in before you, but he was not tracking these stocks. So I'll just put this across to you, sir. This question is on newly listed stocks, Western Carriers and Cross Limited. How are you assessing these two stocks? Have you studied them for their long-term prospects, Western Carriers and Cross Limited? Anything that you could probably point out fundamentally for these two stocks?
With respect to the newly listed space is concerned, Sakshi, the stock, the similar to the rail and logistic space is there in this space. But as per the newly listed stocks to make any entry, what I will do is I will wait for at least a couple of quarters results for these stocks, because post listing, how these stocks are going to deliver in terms of the quarterly performance is concerned, that's crucial for these stocks. So irrespective of the fundamentals, I'll just wait on for a couple of quarters. At least a one quarter results are extremely crucial to make any serious entry for these stocks.
Okay, got that. So that's the view that's coming in. Robin says, hello, Sakshi, Happy New Year. Happy New Year to you as well, Robin. Thank you for extending the wishes to us. Hope you have a fantastic one. Next, we have a question coming in from Gaurav from Agra. He says, मेरे पास BEL के 5,000 शेयर हैं, 322 रुपए पर खरीदे हैं. ये 322 के ऊपर कब जाएगा? So I think he's been holding on through this lower turn on the stock. 292 is the current level. He wants to know by when can his own price return on BEL. What would your suggestion be on this one, sir?
Sakshi, one thing, okay, he entered at the top of the stock price.
Yeah.
So nothing to worry. Okay, the stock is fundamentally strong, and the growth story is intact for this company. But he also remind one thing is the market cap of this company has last few years. The way this such stock also have been a multi-bagger. Currently, the market cap is around 2,13,000 crores. So the stock can still deliver a 15 to 20% kind of CAGR from this range also. So you need to have some patience and hold on to this company, hold on to this stock. Nothing to worry. The stock is in a consolidation phase. This is going to deliver well in the days to come.
Okay, got that. And lastly, Mr. Patini, I wanted to ask you, as far as your own suggestion for the new year is concerned. A lot of our viewers do follow you for your suggestions, and many are actually looking for great ideas to be added onto the portfolios next year. Since we are already discussing a lot of market updates, most of the analysts do believe that one has to temper down the expectations on the markets for the upcoming new year. We are in the 5th year of bull run that's been giving positive returns to all our investors. So there could be possibilities that the markets may not give exuberant returns. So at that point in time, it becomes very important for investors to identify the right sectors and the stocks to be in. As a New Year present and a Christmas present, what would you really share with our viewers, sir?
Sakshi, you really surprised me, because I never thought you will be asking a New Year idea. But still, for your viewers, I am still a strong believer of India's consumer story. And also, as the disposable incomes of Indians rise, people are looking for ultra luxury products in their lifestyle. So, with respect to the lifestyle products are concerned, I have a stock by name Stanley Lifestyle. The stock post listing, the stock got corrected, currently trading around 420 levels. In the next few quarters, stock can deliver decent kind of returns. So investors with a more than 1 year kind of horizon, one can add this stock at every dip, because these lifestyle products are going to deliver well. They are into furniture, and also the home furnishing is concerned. So right now, next in couple of months time, if we get a rate cut, the real estate sales are going to boost up, and also the deliveries are going to come. So when the house is at the final step, the interiors are post interiors. The furnishing the house is extremely crucial. They have a strong brand with respect to the premium recliners and the sofas and dining tables, and the various the household articles are concerned. The stock is expected to deliver well. Their margins are quite high. With respect to the consumer story is concerned, one can keep this stock on their watch list.
Okay, got that. So there you have it, a view that's come in as well. All right, Mr. Patini, thank you so much for being with us on this special edition to share with us all your thoughts and ideas with our viewers, as well as guiding them through their
And
queries as well.
Sakshi, just to add, I am still remain bullish on defense space is concerned.
Yes.
So investors, as usual, it might be look boring, but still they can deliver good amount of results on a CAGR basis. So investors can hold on to the defense stocks, and they can add these defense stocks at every dip.
Okay, add the defense stocks on the dip. Mr. Patini is still bullish on them in the long term. These stocks can definitely provide that extra, alpha to your investment portfolios as well. Thank you so much, Mr. Patini. Yet again, wish you a fantastic upcoming new year to you, to your family members, and to your entire team at Wealth Mills as well. Hope you have a brilliant one, and hope we meet more often on in the new year as well to help have you guide through all our viewers of daily calls right there. Many thanks for being with us.
Always my pleasure to interact with you and share my ideas with your viewers and with you.
Thank you so much. All right, viewers, we'll wrap it up on this note on daily calls, but do stay tuned. There's a lot more lined up for you. We will be talking to a lot of market masters to help you through making the strategies for the upcoming new year. So stay tuned. A lot more is waiting for you to be seen on Business Today. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the year-end special edition on Business Today and on Market Today as well. It's that time of the year when all of us are bracing up for Santa to finally come to town, spread some Christmas cheer.